Hi, my name is Alan from Alan Property. Today, I'm going to discuss on the impact of the Ukraine-Russia war on the property market in Singapore. Some may argue that it is too far away to have a significant impact here. But I think otherwise, as Singapore is an open economy and our economy is very much interlinked to the rest of the world. Whatever happens outside of Singapore will have a significant impact over here. Here, in this short video, I will touch on what will happen if a full-blown war really takes place and the impact to the Singapore property market. Firstly, as we've seen lately, the escalation war has led to oil rise above $100 a barrel based on the recording of this video. I think oil price will continue to rise if the war intensifies. If oil price rise, most goods and services which rely on oil will also increase. Singapore Consumer Price Index increased by 2.3% in 2021. MAS and MTI say that significant uncertainty surrounding the outlook for inflation in the near term, including from the cost of air travel and commodity prices such as food and oil. Take note, this statement is issued before the outbreak of the war. Personally, with rising oil price and a chilling war, I expect inflation in 2022 to reach a record high. The war will also lead to an increase in prices of raw building materials. In fact, raw material costs have significantly gone up due to supply chain bottleneck result from COVID-19. The increase in price of raw building materials will lead to developers to pass them to home buyers instead. This will further lead to an upsurge in prices for new projects. The overall increase in the raw material price, transportation costs, and oil prices will result in more expensive housing. Property developers, on the other hand, were worried. Will there be any buyers if we price them so high? What if we build and they don't come? Before news of the war came out, interest rates were going upwards. With an increase in raw building materials, transportation costs, and oil prices, inflation is likely to increase. Due to this, there will be an impact on home loan rates. The central banks around the world may increase the home loan interest rates to accommodate the increasing inflation. An increase in interest rate will indirectly increase mortgage repayment. Property will be less affordable, and this will lead to lower demand. A long-drawn war can also increase volatility in the equity market. In fact, the stock market from STI to SP 500 have already witnessed a sea of red lately. Volatility in the equity market can cause stock price to fall, resulting in a downward adjustment in wealth. In other words, more economic volatility can mean less wealth, and less wealth means less investment to keep the property market going. During period of instability, many investors will pull their money out of property in favor of safer assets such as bonds or gold. At the same time, property buyers will become more conservative in a war environment, prefer to keep more cash due to job uncertainty. Those who were once considering buying property might put their plan to do so on hold until the economy improves. This will further reduce demands for homes. On the other hand, contractors, they are awarded building contracts prior to the upswing in building costs, and oil prices will face mounting pressure to fulfill their contract obligations. They will face difficulties to complete their projects on time and on budget. Cash-strapped contractors may even file for bankruptcy instead, and this could lead to a spiral effect to the construction industries. So how will all this lead to price movement for the property market in 2022? For the private resale market, the market sentiment on the ground has already turned cautious. Buyers are pulling out and waiting for the storm to clear before entering the market. Sellers who are asking high price may have to moderate their expectations. However, For those sitting on the sideline and have cash on hand, this could potentially be a great time to enter the market to pick up distressed property if the property market turn for the worse. For the new home segment, an increase in interest rate, increase in construction costs, and lower demand could be a double whammy for property developers. This is especially so for property developers that bought land in the last 6 months at high land costs. They also face mounting pressure to build and sell within the 5 years ABSD deadline. For the en-bloc market, this segment has already cooled off after the cooling measures announced on 16 December 2021. Most en-bloc hopeful will likely be shelved as developers turn cautious in a rising cost environment and weaker demand. For those that wish to pick up en-bloc potential properties, the time has finally come. Choose your pick and always buy with a long-term horizon, as en-bloc is always a bonus and not given. Lastly, back to the HDB resale market. HDB has always been a bread and butter housing option for the masses. The huge spike in resale HDB prices in 2021 is not going to happen again any soon. Price in the HDB resale market will likely moderate ahead. The ultimate impact depends on the severity and duration of the war. Here, I hope I have added value to the real estate market by this simple sharing. If you enjoy it, please help me click on the like button and subscribe into this channel. I have spent many hours doing just this video. Thank you and stay safe.